They are lauding Tesla for its ability to rule the car and software industries. They believe that in order for Tesla to become even more dominant in the market, the Dojo supercomputing system will be necessary. In the world of stocks and finance, one name has consistently stood out: Tesla. Investing in Tesla has been an amazing experience lately. While there was significant volatility and a decrease from the 52-week highs for Tesla's shares, the company had not only outperformed last year but also set records in 2020 and 2021. The stock didn't rise above those record highs. Despite this, it's crucial to keep in mind that Tesla is now in an upswing and is situated close to the bottom of a favorable channel. The most crucial question is whether Tesla can thrive in the current state of the market. Growth stocks have suffered from rising interest rates, but if these companies can maintain their strong performance, this might be the perfect storm for Tesla to soar. Since Tesla's July 19th earnings report, the story has evolved. The stock was struggling as of August 16th. It had lost 21% since the release of the second quarter earnings in mid-July. Excellent year-over-year sales growth of 47% and an 83% increase in vehicle deliveries preceded the onset of the downturn. Apparently, not every investor was content. Now let's examine what bulls and bears are thinking. Some believe that Tesla stock will rise, while others do not. We will look at both sides in order to give you a whole picture. On the plus side, Tesla is set to release several significant innovations. These include the much-anticipated launch of the Cybertruck, the continuous growth of the energy sector, and the pursuit of new markets. The stock has already increased due to the confidence of experts like Ben Carlo for the second half of the year. So what is the conclusion? Will Tesla be able to move past its present issues and reach a new high by December? Will it see a 20% growth at the conclusion of this month? Tesla has seen a great deal of fluctuation in its stock. It hit significant high points, especially in 2020 and 2021, raising the standard for the industry. However, it's crucial to remember that Tesla is currently trading below those all-time highs. However, there is a promising sign of persistent rising trend that appears to be forming a channel. Right now, the stock is at its lowest point. The broader market context is crucial in this case. Tesla is often associated with growth equities, which have been negatively impacted by the increase in interest rates. Some of these growth stocks have done remarkably well despite the current market environment, and this raises the possibility that if growth stocks can weather the current storm, this may be the perfect situation for Tesla to surge once more. The fact that many investors are obsessed with the ephemeral fluctuations in Tesla's stock price is an intriguing aspect. Still, the company has been making significant long-term decisions. Tesla's recent announcement that it will be selling more affordable versions of its high-end S and X models serves as one excellent example. By offering these more reasonably priced versions, Tesla hopes to appeal to a broader range of consumers, which might improve its market share and sales volume. Another key factor is the intense competition Tesla confronts, especially in China. China is a significant market for electric vehicles, and in this cutthroat industry where local manufacturers vie for market share, Tesla faces intense competition. These days, price wars and aggressive marketing strategies are commonplace. The story also discussed Tesla's significant reliance on government funding and the company's nearly constant net loss history since introducing its first electric car in 2008. Even though these concepts may represent the opinions of certain analysts regarding Tesla, it's crucial to approach them with some skepticism and not take them as absolutes. Tesla's trajectory is influenced by a complex web of interconnected factors, including market dynamics, investor sentiment, and technology advancements. Many people continue to have the belief that Tesla has the potential to revolutionize the automotive industry and generate substantial profits in the long run, even in the face of short-term challenges and opposing viewpoints. Financially speaking, Tesla's shares increased significantly, increasing more than 5% in reaction to analyst Ben Carlo's upbeat study. He explained several positive developments for the electric vehicle maker that should materialize in the second half of the year. Amidst these developments, the much-anticipated release of the Cybertruck takes center stage. Carlo points out that price cuts and their impact on profits will be the primary drivers of Tesla's narrative in the second half of the company. He listed many things that might drive up the price of Tesla's stock: the launch of the Cybertruck, the growing adoption of fully autonomous cars, the ongoing expansion of the energy sector, the company's forays into new areas, and the possibility of an AI day. Tesla has a distinct approach to its product line. Unlike conventional automakers from nations like Detroit and Germany, who have taken pride in offering customers a broad selection of options from car types to trim levels, colors, features, and options, Tesla has adopted a different approach. By reducing its offers, Tesla was able to offer fewer varieties to consumers. Some examples of this include basic equipment, interior options, a limited number of trims, and a subdued color scheme. Remarkably, Tesla is not the only business employing this tactic. Chinese producers of electric vehicles have also found success by offering a more limited selection of automobiles. The rationale behind this strategy is that offering too many options could make assembly difficult and lead to other production-related problems. Fundamentally, it appears that both consumers and investors view Tesla's capacity to thrive with a relatively limited range of products as a differentiator. This, coupled with a number of intriguing developments that are in the works, have contributed to the recent bullish attitude surrounding Tesla's shares. The advantages of simplicity are evident when one looks at how cars are put together. When a manufacturer receives 100 customer orders for the same car model, but each order varies substantially in terms of configuration and extras, the assembly process becomes more challenging and time-consuming. However, Tesla's streamlined approach, which provides fewer alternatives for builds, has proven effective. This strategy is supported by a number of emerging EV manufacturers, including Tesla's Chinese competitors. Tesla's consistent growth may be seen in its ability to meet and even exceed record-breaking monthly production and delivery targets. Tesla is still at the top of the EV market even as competition intensifies. Due to growing competition, as it has for a long time, profitability and market share may face some challenges. Nonetheless, Tesla still enjoys a significant advantage. By using a similar idea, Chinese electric vehicle EV firms have seen substantial success in the past year. These companies are still growing. Experts attribute this surge to global mileage regulations and pollution standards, which are driving the use of electric vehicles. Despite escalating rivalry, it is expected that Tesla and these Chinese companies would maintain a substantial presence in international markets. Furthermore, a large amount of investment in the electric vehicle industry has been pushed by the August 2022 passing of the Infrastructure Investment and Jobs Act. Manufacturers have poured over $92.4 billion on U.S. EV and battery facilities. Market data indicates that during the last 6 months, U.S. production capacity has increased significantly. By 2026, U.S. EV manufacturing facilities will produce more than 4.7 million new passenger EVs annually, accounting for more than 36% of all newly sold vehicles. By 2027, 95% of newly sold automobiles will be electric vehicles, EVs, with these American plants alone producing 12.2 million EVs a year. Many critics believe that it is inappropriate to compare Tesla to traditional automakers, despite the fact that this is a common comparison. For instance, Norway and the UK are two of the newest countries in which Tesla has placed its V4 supercharging outlets. Numerous V4 stations have been constructed across Europe and more are in the works. These V4 charging stations are another move in Tesla's commitment to enhancing the EV infrastructure. What are your thoughts on Tesla's trajectory and valuation? Feel free to leave a comment below. Remember to subscribe to our channel and like the video for more updates.